Welcome back to my channel, ladies and gentlemen. I am so delighted, I'm so happy to welcome you once again to my channel. So in this channel I talk about forex trading, and my job is to guide you, to give you classic information on how you can make consistent profit in the forex market. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. In today's video, I am going to be sharing with you a powerful trading strategy that I normally use most of the time to generate money consistently from the forex market, and that is the Fibonacci retracement and moving average crossover. I combine Fibonacci retracement alongside with moving average crossover, exponential moving average crossover, to get a high probability trading setup. So what I normally do is, I love to take lower risk. I don't like to take high risk. That is me, right? I love to risk low and earn higher, right? So in this video I'm going to share with you the strategy that I developed, and this strategy has been giving me money consistently in the forex market, and this has to do with the Fibonacci retracement and the moving average crossover, that is the exponential moving average crossover. So the strategy is very simple and straight to the point. So what we'll do is we look at a trending market, right? So before we start, we look at the market structure. So what I normally do in this strategy is that I use the 4-hour time frame to analyze the market, and after which I can now implement my trade in the 5-minute time frame so that I can be able to risk lower money. So when I trade with the 5-minute time frame, I can be able to set up 20 pips stop loss, while my take profit will amount to over 200 or 300, right? So in this scenario I am risking 20 pips to gain 200 or 300 pips, right? Because I am using the higher time frame to identify a trend and then use the lowest time frame to place my trade. So I'm going to share with you guys this simple trading strategy right now on my desktop. Before I do that, I want to make an announcement to you guys. So many traders are losing money consistently in the forex market. Like, I have a friend of mine who just lost over $20,000. This is insane, right? He lost over $20,000 in the forex market, and for the past 1 month this guy has not recovered, right? Because according to him, this is the money that he has saved for so many years, and he's a family man, right? So I felt for him, because that kind of money in Nigeria is not an ordinary money. $20,000 is equivalent to over 20 million naira. So if you lose that kind of money, I know it's going to be painful. Like me, I lost $50,000 back then when I started trading forex as a newbie. I lost over $50,000. I went through a lot of depression, and honestly speaking, it wasn't an easy thing, right? It wasn't an easy thing for you to endure such kind of money. So, and I believe most of you newbie beginner traders have done that. You have blown your account several times, you have lost money several times. Why are you doing that? Because you don't have a mentor. When I first started, I did not have a mentor, right? I was just watching YouTube videos, picking different strategy without sticking to one trading strategy. And my trading psychology then was zero. So I was blowing account every day. Honestly speaking, I lost so much. So after listening to the story of that young man, I decided to create a premium video for you guys. This premium video is specially made for new beginner traders, right? Traders that are just starting, that doesn't know anything about forex. They don't have a strategy. They just want something simple strategy that will benefit them. So that is the people that I personally created this video premium content for. Right now, this video premium content that I created is my personal trading strategy, which I've been using since January 2022, since last year January. And this strategy has been generating money for me consistently, right? So it's a powerful, mind-blowing trading strategy that is not for free, right? I wanted to make it free, but I realized that if I make this video free, most of you will not value it. You will not value it. You will not even appreciate it. So that is why I decided to to place a price tag for it. So this video premium content goes for $100, $100 only. So if you are interested to get a copy of this premium video, you can simply chat me on WhatsApp. My WhatsApp number is on the description of this video. You can simply chat me on WhatsApp and I will share the video with you. Bear in mind that the price for the video is just $100, and the information that you garner from the video is more than $100,000. The value is more than $100,000. So if you are interested, you want to get the video copy, you want to get a premium copy, then chat me on WhatsApp. The video has 2 hours duration where I detail everything from basic to advanced. So you have everything. So what I trade there is gold. Like I said, gold is my major pair, and that is the pair that I trade since I started trading forex, and that is what I'm still trading till now. So what I used in that training video is gold. So I would advise you to also make use of gold, because if you buy the course, you become my mentee and I will become your mentor automatically. So you are free to ask me questions on WhatsApp, ask me anything, and I'll be there to guide you, right? So please, if you're interested, my WhatsApp number is on the description of this video. Chat me on WhatsApp and get a copy of the video. So back to business. So right now we are talking about Fibonacci retracement, and I stated that I'm going to share with you a powerful trading strategy that I invented by myself using the Fibonacci retracement and exponential moving average. And this strategy has been so awesome. This strategy has been making me money consistently back to back. So I am delighted, I'm happy to share this strategy with you guys. So now what we are going to do is we are going to use the 4-hour time frame for analyzing the market, and after which we use the 5-minute time frame to place our trade. So we are going to use the 5 exponential moving average and the 20 exponential moving average for our crossover, and then we are going to use the Fibonacci retracement. Fibonacci retracement tool is a tool that you use during a trending market. The essence of Fibonacci retracement is for you to pinpoint support and resistance level, right? So Fibonacci retracement level comes with numbers, right? This number serves as key levels, that is support and resistance levels, where many traders are looking at. So it depends on the key level that the price decided to respect. So that is the key level that you are going to focus on. So right now I'm going to jump into my desktop and I will show you how I trade this strategy. Alright, ladies and gentlemen, we are right now on Trading View and we are making use of GBP USD, that is the British pounds against the US dollars, and we are using the 4-hour time frame for our technical analysis, and after which we are going to switch to the lower time frame, that is the 5-minute time frame for our entry. So like I said, in this trading strategy we are going to use just 2 technical analysis, that is the Fibonacci retracement and the moving average. So I advise you to watch this video from beginning to the end, pay clear attention so that you understand this video perfectly. So right now, for you to start, the first thing you need to do is to look at the market structure. Like I say, the Fibonacci retracement worked during a trending market and you are looking for a pullback. It worked extremely well during a healthy trend, right? A healthy trend is when the market is making higher high and higher low in an uptrend and lower high and lower low in a downtrend. So we call that a healthy trend, right? So make sure that there is a healthy trend for you to be able to trade this strategy. So that is why I say the first thing you need to do is to look at the market structure and confirm that the market is in a healthy trend. So right now we are trading GBP USD, and if you watch clearly, you see that GBP USD is in a healthy trend, right? If you watch at the market structure, you see that GBP USD is in a healthy trend. So how do we trade this strategy? So the first thing we need to do is to plot out our Fibonacci retracement tool. That is the first thing we need to do. We plot out our Fibonacci retracement tool, and then let's start from here, right? Formerly the market was ranging and then broke above this resistance level, and that is when the uptrend began. So I presume the uptrend started somewhere around here. That is where the uptrend begins, right? So right now you are watching the market and the uptrend have started. So the market rallied up and got to this point and they started to make a retracement. So bear it in mind that you wait for retracement. If you see an uptrend, always wait for a retracement, because that is when you are going to plot your Fibonacci retracement tool, right? So right now you have watched the market, right? The market broke above this resistance level, went up, came back here, broke below it, and then broke above it again, and then the uptrend now started. So this three big green candlestick is a strong buying momentum, telling you that the uptrend has begun and there's a strong buying pressure in this market. So now the market has rallied all the way to this point. So you don't need to buy here because the market has traveled far. You need to wait for a retracement, right? So right now the market is now making a retracement. So immediately you spot the market making a retracement, what you do is you simply plot out your Fibonacci retracement tool and then map from the lows to the high, because this is clearly an uptrend. You map the Fibonacci retracement tool from the lows to the high and extend it to the right. So let me give you an example of what I mean. So this is a Fibonacci retracement tool. You simply map it here from the lows to the right, to the high, from the lows to the high, and then extend it to the right. Good. Now you can clearly see that you have mapped out the Fibonacci retracement tool. You can clearly see this is the low, this is the beginning of the trend, and this is where the price got to and started making a retracement, right? Now for you to be able to trade this strategy very well, you need to understand this Fibonacci number. These are important numbers that traders are looking at. So the numbers on the Fibonacci retracement tool are very important. These are the numbers that many traders are looking at. So we have the 0.236, we have the 0.32, we have the 0.382, we have the 0.50, we have the 0.618, and we have the 0.786. Then you measure the Fibonacci tool from 100 to 0, right? So this is the swing high and this is the swing low. So you connect the Fibonacci retracement tool from the swing low to the swing high, since this is an uptrend. So after connecting it, what you have to do is to wait and see the reaction of the price. Now you can clearly see that the price is making a retracement, right? So what you are looking at the point, the level where the price will reverse from, right? So that level automatically forms a support level for you, because that is the level that so many traders are looking at. So right now you can clearly see that the price is now retracing down, and when the price got to this level of 0.382, the price reversed from there, right? The price reversed from there went up and then came back again and tested the level and then rallied up again. So this confirms that the price could not break below the 0.382, telling us that this level is very strong, and so this level automatically becomes our support level. So now that you have watched the price retrace all the way from this swing high and then got to this point and couldn't break below this 0.382, right? Now the price got there, then reversed, went all the way to this point, came back again, tested the level, and then started to rally up. So once you see the price making this move, what you need to do is you simply go to the lower time frame, because one is that you have already confirmed that the price have you have confirmed that the price could not break below this 0.382 Fibonacci ratio, and you have confirmed that the price could not go any further. The price went down and they ended up in a week, went down again, ended up in a week, then rallied up, came down again, tried again to no avail, and then ended up with this long week, right? This is a long rejection week. So this week now confirms to us that the buyers are still active in the market and they have decided to push the market up. So for the fact that this is a higher time frame, you cannot place a trade here using a higher time frame because your stop loss is going to be large. Remember that we want to risk small money to make big money, right? And this is GBP USD, right? And we are trading in the direction of the trend. So for the fact that the price has made a retracement to the 0.382 of the Fibonacci retracement, what we have to do is we simply head straight to the lower time frame and then wait for a moving average crossover. So before we do that, we need to plot the moving average, the exponential moving average. So to do that, you simply go to indicator, you look for moving average exponential and double click it so that it will come out 2 times, right? You click it once, click it 2 times, right? Then it will come out. Then you go and set it up. For the fact I already have it, I'll just unlock it for you to see it, right? Now you go to settings and set it up. You change the color to the color that you want. I'm using black, so I use black for the 20 exponential moving average. Then you set it up and then you can make it to look thick, right? Use it to make it to look thick. Change the color. Then the input, right? You make the length 20, the length 20, and the method should be EMA, that is exponential moving average. Then you click OK. Then the second one, you also set it up. You set that one to 5 EMA. The length should be 5. Then the method should be EMA, right? You also change the color. You change the color to any color you want. I decided to change mine to blue, right? And you can also increase the thickness to make it be visible. Then after that, you now click OK. So you have finally set up your 20 and 5 exponential moving average. So right now we have set up the Fibonacci retracement tool and we have set up our moving average, the 20 EMA and the 5 EMA. The black line is the 20 EMA, while the blue line is the 5 EMA. So for the fact that we have plotted out our Fibonacci retracement tool and the price have rallied all the way to this point and couldn't break below it, right? Instead, the price went up to this level, came back, tested it, and then went up. So what we will do after confirming that the price could not break below this point, we simply go to the lower time frame. We go to the 5-minute time frame and then spot the level. So before we go to the 5-minute time frame, for us not to be confused, before we go to the 5-minute time frame, for us not to be confused, what we will do is this. We will use a vertical line to identify this level, right? So use a vertical line to identify this level, right? I think this is the level where we are looking at, because the price came all the way to this point, right? Then couldn't break below it, went up, then came down to this point, right? and then broke it a little, then went up. So in the process of this red candle going up, the process when this red candle is going up, you simply head straight to the lower time frame, right, so that you can perfect your entry, because you can clearly see that the price could not break this level 2 times, making it a strong support level. So for you to get a sniper entry, you simply go to the lower time frame and then plot this vertical line for you to know the period where you are. You go to the lower time frame, like the 5-minute time frame, right? Then you search for it, all right, search for it. Okay, I think this is it. Now we are at it. So you zoom it so that I can see the price very well. Zoom it very well. So we are the lowest time frame, which is 5-minute time frame. So we want to get a sniper entry right now, right? We want to get a sniper entry, confirm. So now if you watch, you see that this is when the price started to rally up. The price came down again. This is the second time that the price tested the Fibonacci ratio. This is the second time that the price tested it, right? You know, the price tested it 2 times, right? This is the first time the price tested it and couldn't break below it. The first time that the price tested it, here, tested it here again, and then tested it here again. This is 1 touch, 2 touch, 3 touch, and then 4 touch. Now this 4 touch tells you that the support level is very strong. This Fibonacci ratio is holding this level because price could not break through it. Price tried to break through it first time, second time, third time, and fourth time, to no avail. So what you have to do now is simply wait for a crossover for you to enter your trade. Now what do? You wait for a moving average crossover. Right now you can clearly see that the moving average crossover has just happened, right? You can see that the blue line now crossed above the black line, which is the 5 EMA crossed above the 20 EMA. So this is when you are expected to place your buy trade. So you wait for this candlestick that caused the crossover to close. This green candlestick, this is the candlestick that caused the crossover. You wait for it to close and then you place your buy trade there. So you simply place your buy trade here. Immediately the candlestick close, then your stop loss should be 20 pips. Your stop loss should be 20 pips. 20 pips should be 7. All right. Okay. All right. So do you know that you can even use 10 pips, because this is pure 5-minute time frame. So if you want lesser risk, you can even use 10 pips. Let's use 10 pips. Let's forget about 20 pips. So you can even use 10 pips, right? Very simple. You use 10 pips. So this is it. All right. Okay, so this is your stop loss. Your stop loss is just 10 pips, right? This is your entry. The moving average crossed the slower one. That is the faster moving average. The 5 EMA crossed above the 20 EMA, right? And then the price closed above it, and you place your buy trade. And then your stop loss is just 10 pips, right? This is 10 pips. This is your stop loss. Your stop loss is just 10 pips. Now what will be your take profit? You go back to the higher time frame, the 4-hour time frame. Good. You go back to the 4-hour time frame. Confirm. Now you can clearly see. Okay, let me remove this one. You can clearly see this is our entry. Let me remove this. All right. You can clearly see this is our entry and this is our stop loss. You see, we went to the lower time frame to place our entry and gave ourselves a smaller risk, that is 10 pips stop loss. So our stop loss is 10 pips, right? Then this is our entry. So what will be our take profit? Our take profit will be at the previous swing high, right? Which is this. This should be our take profit. The previous swing high should be our take profit, right? This should be our take profit. Now if you watch, remember this is a 4-hour time frame, right? Then this trade will take many days to be achieved, right? This trade will take many days because this is clearly a 4-hour time frame. So this trade will take up to 2 days or 3 days for your take profit to be triggered, right? So this is a powerful swing trading strategy, right? So your stop loss is just 10 pips, right? And then imagine your take profit, right? If you calculate it now, you see that your take profit is almost 200 pips. Your take profit is almost 200 pips, while your stop loss is 10 pips. That means you are risking 10 pips to make 200 pips. Can you imagine? This is a powerful trading strategy. So this is how you'll be doing it. Once you cash your take profit, you have made over 200 pips while you risk just 10 pips. After achieving that, you wait for another retracement again for you to implement this same strategy, right? So if you watch, is that another retracement happens here, and before you know it, you do the same thing that you did here. So this is one of the simplest trading strategy that I use to make money in the forex market. So ladies and gentlemen, that is all I have for you in this video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this. And also, don't forget to subscribe to this channel. Turn on the notification icon to be notified whenever I publish new content. And if you are interested in my premium video, you want to be my mentee, you want me to mentor you in forex trading, you can chat me on WhatsApp. My WhatsApp number is on the description. Chat me on WhatsApp and I will share my premium video with you. Like I say, it is just $100. Please chat me on WhatsApp. I will see you again in my next update. Bye.